Why 0.1 Bitcoin could be your last real chance. Let's rewind for a second. Remember when Bitcoin was sitting at just $100 and you shrugged it off? Then it hit 1,000 and you thought, well, I missed it. At 10,000, you told yourself the ship had sailed. But here's the truth nobody's spelling out clearly. Owning even 0.1 Bitcoin, just 1/10 of a coin, might be the last realistic shot most people ever get. If this video gave you a new perspective, hit subscribe and join me for more. Most folks are about to repeat the same mistake, but this time it's not about missing a whole coin. It's about missing a fraction. That tiny slice is on track to becoming something the average person simply won't be able to afford. Not because Bitcoin failed, but because it succeeded. I'm Sydney. I've spent the last 7 years diving deep into money, crypto, and investing. While most people were buying stuff that loses value the moment you swipe your card, I was quietly stacking Bitcoin when people laughed at it. That decision changed my financial future. And now, I want to show you why the window is closing faster than anyone realizes, and why ignoring it today could be the regret you carry 5 years from now. The hard cap nobody can touch. Here's the math you need to grasp. Bitcoin has a hard cap. 21 million coins total, forever. No central bank can print more, no government can inflate it, no billionaire can rewrite the code. It's mathematically finite in a world where everything else is being inflated into dust. But here's what most people forget when they hear 21 million. Not all of those coins even exist anymore. Right now, about 19.9 million Bitcoin have been mined. But an estimated 3 to 4 million are gone forever. Lost in forgotten wallets, destroyed hard drives, or locked behind private keys that vanished with their owners. Think about it. People who bought Bitcoin in 2010 and tossed their laptops. People who died without sharing their seed phrase. Coins sent to wrong addresses that can never be recovered. That Bitcoin isn't coming back. Ever. So we're not talking about 21 million. We're talking about maybe 17 million that actually exist today. Now divide that by Earth's population. 8 billion people. That's about 0.0021 Bitcoin per person. If Bitcoin becomes what many believe it will, digital gold, the backbone of a new financial system, then owning 0.1 Bitcoin means you're holding nearly 50 times more than the global average. Why people still don't get it? Here's the problem. People still measure Bitcoin in dollars. They see $11,000 for 0.1 Bitcoin and think, that's a lot of money for just a fraction. And yeah, in today's dollars it is. But they're not understanding what 0.1 Bitcoin actually represents. It's not a small amount. It's a massive slice of a finite network that the entire world is about to fight over. Think back to 2011. Owning 1 Bitcoin meant nothing. It was worth less than $1. You could mine it on a laptop. People were giving it away on forums just to spread awareness. Fast forward to 2017. Suddenly, owning 1 Bitcoin meant something. It hit $20,000. Everyone who ignored it at $1 suddenly cared, but most still didn't buy because they thought it had already gone too high. By 2025, the conversation shifted again. Now people are saying, okay, I can't afford a whole coin, but maybe I can get 0.1. That's the next scarcity level. Just like people used to say, I want to own 1 ounce of gold. The next generation will say, I want to own 0.1 Bitcoin. But by the time that mindset goes mainstream, it'll already be too late. Institutions are front-running you. While retail investors wait for dips and try to time the market, institutions have been front-running this for years. MicroStrategy alone holds over 500,000 Bitcoin. BlackRock's ETF, Fidelity's ETF, Grayscale, they're scooping up tens of thousands of coins every single week. And here's what that means for you. Every coin they buy, every Satoshi that moves into institutional cold storage, is 1 less coin available for regular people. These institutions aren't trading. They're not selling when the price dips. They're accumulating and holding forever. Which means the supply available for you to buy is shrinking every single day. Once the majority of Bitcoin sits in ETFs, sovereign wealth funds, and long-term institutional vaults, the supply available to everyone else becomes razor thin. That's when 0.1 Bitcoin stops being expensive and becomes impossible. The silent killer, inflation. Let's talk about something nobody wants to admit. Your cash savings are dying right now. Inflation isn't just an abstract economic term anymore. It's eating your purchasing power every single day. The Federal Reserve printed more money in 2020 and 2021 than existed in the entire history of the United States before 2008. Think about that. More dollars were created in 2 years than in the previous 230 years combined. That money didn't vanish. It's sloshing around in the system, making everything you buy more expensive while your salary stays the same. Coffee that cost $2 5 years ago now costs $4. Houses that cost $300,000 in 2019 now cost $500,000. Rent is up 40% in major cities. Groceries are up 25–30%. Your money is worth less every year. And that's not slowing down, it's accelerating. Meanwhile, governments are drowning in debt they can never repay. The US alone has $36 trillion in debt. There are only 2 ways out. Default, which destroys the system overnight, or inflate it away, which destroys your savings slowly. Guess which one they're choosing? They're going to print more money. They have to. And every dollar they print makes your existing dollars worth less. Your savings account earning 0.5% interest while inflation runs at 5%, that's not safety, that's slow-motion theft. The 3 psychological traps. So why do most people miss Bitcoin even when they see it happening in real time? It's not because they're dumb, it's because they're stuck in 3 psychological traps. Short-term thinking. People treat Bitcoin like a stock. They buy when it's pumping because of FOMO. They sell when it drops because they panic. They repeat the cycle until they've lost both conviction and capital. Meanwhile, the quiet accumulators, the ones who bought at $500, $5,000, $50,000 and never sold, those people now own life-changing amounts of Bitcoin. Bitcoin rewards patience, not perfection. It doesn't matter if you bought at the perfect bottom. What matters is that you stayed in the game long enough for the world to catch up. Disbelief in exponential growth. People understand linear growth. 2 becomes 4, 4 becomes 6. But Bitcoin doesn't grow linearly. It grows exponentially. Michael Saylor, the guy who bet his entire company on Bitcoin, ran the numbers. Bitcoin's long-term growth rate averages around 29% per year. At that pace, Bitcoin doubles roughly every 2.5 years. If Bitcoin sits at $110,000 today, by 2027 it could be $220,000. By 2030, $500,000, $600,000. That means 0.1 Bitcoin could be worth $50,000, $60,000 in 5 years. Even if you cut those numbers in half, you're still looking at $25,000, $30,000. That's still more than most Americans have in their savings account right now. Lifestyle inflation. This one's brutal. Most people could afford 0.1 Bitcoin if they really wanted to, slowly, through consistent accumulation. But they don't, because they spend their future wealth on present comfort. New iPhones every year, streaming subscriptions they barely use, $8 coffees, $60,000 cars they can't afford, vacations on credit cards. All the temporary dopamine hits that trade away long-term freedom. They're choosing comfort today over independence tomorrow. The coming wealth transfer. Here's what's coming. Over $100 trillion in wealth is expected to transfer from baby boomers to millennials and Gen Z over the next 2 decades. And guess which generation understands digital assets better? The old guard still trusts banks and government bonds. The new generation already trusts code more than institutions. As that wealth transfer accelerates, Bitcoin becomes the default store of value for an entire generation. By then, the idea of owning 0.1 Bitcoin will sound like someone in 2025 saying, "I want to own 10 acres of prime Manhattan real estate." Possible in theory, but not at prices regular people can afford.